BNP Paribas continues to outperform a lot of the rivals, as we've seen with your first quarter results. Talk to me a little bit about the health of your bank. Where activities and which units do you think will power ahead in the coming quarters?
Well, BNP Paribas does reasonably well. We are very active in CIB activities. They are profitable the first quarter. Good. We are very strong in Europe, especially in the Eurozone. We are growing in Germany, and we allocate resources to do this, to serve companies cross-border. And of course, the US and Asia are still very important regions for us. We see the situation as improving. Growth is better, more political clarity. So hopefully, business will grow.
Almost every day, Tom and I talk about Deutsche Bank. Almost every day, we talk about Credit Suisse and some of the upheavals and the restructuring needed at some of the other European banks. Is that an opportunity for BNP Paribas to gain market share in certain activities?
Look, they do their job. We do our job. They have, what you say, probably to restructure. It's up to them. We do our own job. We try to be good, to serve clients, to be good for shareholders and committed to society. Each of us, we do a job. Now, what do I see is market consolidation. Yes, you are right. I do not see many operations among banks, cross-border operations. But there is some kind of market consolidation, which is quite visible. I'll take one example in Europe, which is quite obvious, is cash management. Cash management activity has been consolidated, still being consolidated. So yes, you are right, there's some consolidation. But, you know, it's not a bank opposed to another bank. It's part of the story of the market. This is what we need to do in Europe to have stronger banking activities.
Do you believe there will be more appetite from regulators to actually allow cross-border mergers in European banking?
They say they wish. I can understand they wish. And they can understand they see a need for it. But at the same time, it's not easy. Not easy to do. It depends on the sector of activities and the size. But capital constraints are a serious limit to what they may wish. And so maybe there will be, but I do not see many in the short term.
What do you worry about the most when it comes to regulation? When it comes to Basel, it seems that the US is playing ball a little bit more than maybe they were a couple of months ago.
There are a few questions. Growth is picking up in Europe. Let's say mildly, Europe is recovering. It's better. So there is a need for funding. Europe is mainly funded through the balance sheet of the banks. The banks must be in good shape to finance growth and job creation, which are much needed in Europe. That's the reason why the discussions in the Basel Committee are so important. We do understand there are reviews. We do understand there is a need for adjustment. I have no difficulty with this, but I hope that the conclusion will be such that we'll keep the capacity to finance the Europe economy in a safe way. Now, you have a second question you have raised, comparing with the US. In the US, they speak about deregulation. In Europe, we do not speak about more regulation, but more stable regulation, not less. Now, we don't know yet what's going to happen in the US. I think we need time to understand. Now, there are a few sensitive points for which I think there's a need for specific monitoring. I'll take an example for you. It's the regulation or the new regulations on trading books, both in Europe and in the US. I hear different mindsets. In New York, I hear that maybe they will not move too quickly, maybe they may amend. In Europe, I hear that they want to implement. This is a very sensitive question on global competition, and we compete across the Atlantic, which is good, which is fair and efficient. So I have to be very careful about this.